Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, and it's a little after 9 a.m. coming to you from the trading floor on Wednesday, July the 9th. Why is that date significant? Well, the 90-day pause for the reciprocal tariffs expired at midnight last night. And so that means that they're off again. And so we're going to talk a little bit about that in the situation where we face. Now, tariffs are going back up for many countries, and I'll kind of outline some of that here in a little bit. But first, let's put some perspective on it. Remember in April when these reciprocal tariffs were first announced and we saw chaos hit the markets, a big sell-off in commodities as well as in the equities. And as the markets across the board reacted to fears of a worst-case scenario, that the world was going to go into a big tariff war that was going to slow down global economic growth, create global recession, and higher prices, and so stagflation, if you will. That didn't happen. And the markets have adjusted to the 90-day pause 10% tariffs. And now we're talking about going up to the original levels or something near that in many cases. And the equity markets are trading near record highs, the recent record highs that they set. In fact, we're higher today, even as many of those new tariffs have been announced again. Now, they don't go into effect until August 1st, the reciprocal tariffs. And that's because Treasury Secretary Bessent, who is involved in the negotiations, convinced President Trump that if you give me more time, I think we can get some of the more of these deals across the finish line. So far, we only have deals from Britain and from Vietnam. And he thinks we can get more across the finish line. So we're going to talk about that here a little bit this morning. The European Union is one of those countries that there is some optimism and maybe get an agreement. If you look at what the European Union faces currently, it faces about 50% tariffs on steel exports, 25% on cars, and a broad 10% tariff on most other exports. And 50% tariff is now expected on copper as well. President Trump stating that this week, copper tariffs going to 50%. And he's also announced up to a 200% tariff on pharmaceuticals is possible. Now, that's not official yet. That's just a threat that he has made and says he'll be making an announcement soon. So that's kind of what the environment in which Europe is negotiating an agreement now. European Commission president has indicated that she really wants an agreement, and they're working hard to get an agreement with the United States. And so there is some optimism there will be. They have stated that they're willing to accept a 10% across the board tariff, but there are some areas that they want to protect. And so we'll see how that plays out. But there is movement there that is encouraging. As we look at Canada, there too looks like we're moving towards some type of an agreement, and I would anticipate that to be the case. Haven't heard much about Mexico, but Mexico's president has done a good job of working with the Trump administration, so I wouldn't be surprised to see an agreement with Mexico as well. That may be complicated, as well as the Canada one, on what President Trump's ambitions are for renegotiating the USMCA trade agreement signed during Trump 1.0, but there does seem to be some progress there as well. India is another country which we've heard many times we're close to getting an agreement. That may have been complicated somewhat by President Trump's statement recently that he's looking at a 10% tariff on all countries that are members of the BRICS coalition for their policies that he sees as anti-American. Now, looking at the language of his statements, it's a little unclear if he means automatically if you're a member of BRICS that you're going to get the 10% tariff, or if you're a member of BRICS who supports policies that are seen as anti-American, that it's going to be. And that could get tested with India. After President Trump's announcement of the 10% BRICS tariff, we saw some countries that are members of BRICS, like South Africa and Brazil, come out and publicly be very critical of the president for it. India has not, and they're involved in the negotiations, and they have indicated that they don't necessarily support, or in fact, that they don't support anti-American policies, and at any currency negotiations that they're doing are purely for risk management purposes. So India seems to be walking a fine line, wanting some type of an agreement. And India has some of the highest tariffs of any country that we're dealing with right now. Now, what we know so far is we did have the list of 14 countries that letters were sent to, giving tariffs. Most of those 14, their tariffs were identical or within a point or two of what was announced on April 2nd. There were a few that saw more significant declines from the April 2nd. Most notably, when we look at the commodities, I look at Japan and South Korea at 25%. If they were to retaliate against commodities, and I'm speaking particularly here of energy and food commodities, that's the key question. If they don't retaliate with tariffs, then it doesn't really impact our commodity sales to them. But if they were, for example, to put a 25% retaliatory tariff on our meat or grain or oilseed products that they import, then that could dramatically hurt our exports. Right now, those commodity markets are trading as if everything's going to get worked out. They're focused on seasonal, growing season type of environment in fundamentals, supply-driven fundamentals right now. They'll worry about demand side later. I do think that China and the United States are far from an agreement, and I think that becomes more of a market factor as we go through this month of July. July is the month when China typically really ramps up its purchases of U.S. soybeans for delivery in the fourth quarter of the year. And so far, they have registered zero on the books under their name. And if that continues to be the case through July, then I think the trade's going to start focusing on the fear that we could lose that business. It's estimated that China's reserve supplies are at least twice what they bought from us this last year. So they could just shut things off if they wanted to. They could waive the tariffs as they have done for other products. Sinograin, which is essentially immune to the tariffs, could purchase and then put it in reserves and then resell it to crushers. There are a number of things China could do, but we're going to be watching those July sales to China and whether they happen or not very closely. So that'll be something else we'll be keeping our eyes on going forward. The deal with Vietnam, of course, had 20% tariffs that they accepted whereas they opened up the total market to the U.S. products. That's a great opportunity for U.S. commodities to go to Vietnam. China was angered by it. It becomes a pattern now that the United States could seek with other countries. And again, I continue to say one of Trump's objectives is to have trade agreements that help contain China. We have yet to see how China is going to retaliate against Vietnam because, frankly, the 40% tariff on transshipments through Vietnam are still lower than the tariffs that we directly have on them. So we may still see the transshipment, so they don't want to overly anger Vietnam, who is their neighbor, but they do need to send a message to other countries. But this also creates the environment, as Trump is doing this, that I think still, that I think still overall creates a volatile environment and relationship between China and the United States. And as such, I still do not think that we are anywhere close to a comprehensive trade deal with China. Now, there were rumors last week that when President Trump suddenly said he was going to appear in Iowa to speak on July 3rd, that he was going to announce a resumption of the phase one trade agreement with China. We saw no confirmation of that anywhere. And of course, he did not do that. And that remains a possibility. But I remain skeptical until I see it at this point. And so nothing with China. Overall, we continue to move forward. We'll continue to keep you updated. More letters going out today, and again, the expectations are those letters for various additional countries are going to say August 1 is when they'll go into effect, giving some time for negotiation. A number of countries are racing, trying to get an agreement by August 1 now. So that's the update as we see it on this July 9th. Of course, the grain and oilseeds are also be looking at a USDA WASDE crop report coming out on Friday. The big question is, will they raise their yield estimates for corn and soybeans with crop ratings being so good, especially for the corn crop? The corn crop rating right now is like the second best of the 2000s. But as we look back at the previous July crop reports, USDA has never raised its soybean yield in the July report, going all the way back to 1993. It has raised its yield for corn three times, and not since 2003 in that period of time. So it raised it three times between 1993 and 2003, but it hasn't since then. It's lowered its corn yield six times and its soybean yield five times since 1993 in the July report, but lowering isn't even in the discussion now. So we're basically expecting the supply side of the balance sheet to remain unchanged other than the acreage changes from the July 30th, or excuse me, from the June 30th acreage survey. So we'll reduce acreage a little bit for both corn and soybeans, not that significantly. But watching on the demand side, what adjustments we have there, we should see USDA raise its old crop corn export target once again, maybe up to 75 million bushels. That could take our ending stocks projection closer to 1.3 billion, which is historically a tight level. But right now the trade is focused on new crop because there's no signs at this point we're going to run out of supplies before the next harvest. So the market's focused on new crop, and right now yield models are suggesting yields that are well above trend, and that means prices need to find levels that'll create new demand after a time when South America's also had a big crop. So like and subscribe if you want to continue to receive these reports from the trading floor, and I'll continue to keep you updated as developments occur. Thank you.